Today I'm going to show you 3 stocks that I'm looking to add to my portfolio as sort of a speculative investment. These are not companies that are profitable yet, but they do have high revenue growth, and most importantly, they are under $20, which is one of the reasons I want to add them to my portfolio so I can allocate a lot of shares. So let me know at the end of the video which of these 3 stocks you think is the best and which do you think will perform the best in the future. Now, the first stock we're going to be taking a look at is going to be OneStream. As you can see, their current market cap is about 5.17 billion, which is not a lot. They're still considered to be a small cap stock, and their current share price is $20.79. If we take a look at the overall history of the graph, they're down 25%, which is about $7. And as you can see, it had a huge dip in April, which what company didn't? It recovered a little bit and now it's back down to the 20 levels again, which is where I'm looking to buy, as this company was in the lows of 1670 and the highs of 3538. Now, what does OneStream do? So they offer AI enabled corporate performance management. Basically, they offer data for enterprises and large businesses. So these helps, for example, managers and CFOs to start planning faster, forecast, budget, and also reduce some reporting. And since there's an AI boom right now, since they use AI, this company is generating a lot of revenue. I don't know if it's because of the hype or just the company is great in general. That's why I'm doing some research on them, but this is one of the ones that I have on my watch list. Now, as you can see here, one of the things I look for the most in this type of stock is the revenue growth, and they have been growing their revenue for about 20 to 30%. Their earnings are still not good, but usually these newer companies, they tend not to be profitable at the beginning and then grow over time, especially when they have strong revenue growth. However, things for the companies have been looking better. They were upgraded by Goldman Sachs, expecting a bullish move in the future. Obviously, all this information is in ChatGPT, just makes it a lot easier for you guys to see it, and I could see it myself. Again, this isn't not financial advice on any of these 3 stocks. Please do your own due diligence, but ChatGPT addresses this as a critical function in enterprises, the finance department, and replaces fragmented legacy systems with a unified, again, AI enabled platform. Now, if we take a look at analyst targets for the stock, they have an overall low forecast of 25, an average forecast of $30, and a high forecast of 39. Do keep in mind that the financials for these type of companies do not look great. As you can see, EPS are negative, operating income and net income are negative. However, their free cash flow has been increasing a lot, and so has their revenue. Next on the list is going to be SentinelOne, which they're a cybersecurity company. As you can see, again, small cap, 5.86 billion of market cap. Their 52-week low is 15 and their 52-week high is $29.29. All-time history of the chart, they are down 57%, which is about $25. Now, what do? They're a publicly traded cybersecurity company, which is a sector that's going to be growing a lot, in my opinion, in the future. Yes, there is a lot of competitions, but I think SentinelOne, especially if you take a look at the earnings report from last week, there were great numbers. So I do see this company doing a lot better as time goes by. And again, also this company uses AI-powered cybersecurity. So this is why it's performing in this market as well, since again, cybersecurity is, AI is sort of a hype right now. So they offer, basically their technology prevents and detects any type of threat to a company or enterprise with minimal human intervention. And also, as we just spoke about on the last company, we want to see the revenue increasing. They have been increasing their revenue by 32% year over year. Yes, again, they're having losses in EPS, but every company that's this small is going to have losses at the beginning. They do have a lot of competition with bigger companies like CrowdStrike and Palo Alto, but again, this is an speculative move. I want to buy stocks that are low cost in terms of share price, and hopefully once the sector grows of cybersecurity, they take a little bit of that pie, since it's such a huge sector, and this stock can increase in price as well. Now, again, if we take a look at the overall financial of a company like this, EPS is negative, net income is negative, but the EPS is close to being positive, especially with this sector growing. The revenue is up and the free cash flow is also negative. However, when we take a look at what analysts are expecting for the stock, the lowest forecast is going to be about $15. The average is going to be about $23.41. And the highest forecast is going to be about $37.80. Next on the list is going to be NU Holdings, which is a much bigger company. The market cap is currently at 70 billion. I guess you could take a look at NU and see this is the SoFi of Latin America, maybe, or something like that. This is a Brazilian company. Their 52-week low was $9 and their 52-week high is $16.14. We take a look at the max history of the chart. The company was growing at a decent rate. Then it got stagnant a little bit and is maintaining the range of $10 to $12 for some time now. After it's reporting earnings this month, it has been increasing in share price, so that's why we're taking a look at this company today. Now, before investing in this company, you do have to keep in mind that institutional ownership represents about 47 to 84% of all of their shares, and the top investors are going to be BlackRock, Baillie Gifford, and Capital Research Global Investments, among others like JP Morgan Chase and Morgan Stanley. If we take a look at the revenue growth from 21 to 22, they increased about 182%. Obviously, this is going to start slowing down as the company gets bigger. Then it went to 68%, and now we're currently around the 43 to 58%. And as you can see, this company is growing very fast. It had a $2 billion market cap in 2021, and now, as we just saw, it's over $70 billion of market cap. And there's large amounts of room to grow for a company like this. Again, you compare it to someone like SoFi in the United States. They're a banking company. Their platform is great. The only thing that I don't like about this is that it's not in the United States. Sometimes political measures take a lot of effect in this type of companies that you cannot control. Sometimes political people in other countries do whatever they want without any repercussions. So that's why I'm sort of hesitant to invest in the stock. But in terms of the financials, I mean, this is the one that looks the best out of all three. As you can see, revenue is up, EPS is positive, operating income, operating cash flow, their net income is up as well, and they also have free cash flow. Now, if we take a look at the analyst forecast for this company, it's going to be about $7 for the lowest forecast, $15 for the average, and $21 for the highest forecast. Keep in mind, this is just analyst forecast. Doesn't mean this is exactly what's going to happen with the stock, but it's a possibility. So out of these three, which do you think is best? Please let me know in the comments below. And as always, I'll see you in the next video.